In less than a year, the median home in West Palm Beach lost $60,000 in value. That's not just a number on paper. It's a real hit to families who've poured their savings into what they thought was a safe investment. So what does this mean for homeowners and the local economy? For starters, folks who were counting on their home's value to fund retirement or their kids' college might be scrambling now. And it's not just about personal finances. When home values drop like this, people spend less. They hold off on renovations, skip the new car, maybe even cut back on dining out. That means local businesses feel the pinch too. Contractors, realtors, even the coffee shop down the street, everyone's connected in ways we don't always see. The ripple effect is real, and it's spreading fast. You know, there's a storm brewing in West Palm Beach, and it's not just the weather I'm talking about. CoreLogic just dropped a report that's got everyone on edge. They've ranked West Palm Beach among the top 5 most at-risk housing markets in the country. And get this, there's over a 70% chance prices could take an even bigger hit. That's not just a dip, that's a potential free fall. For homeowners, this isn't just about numbers on paper. We're talking real money, real equity slipping away. If you bought at the peak, you might be staring down the barrel of owing more than your home's worth. And for investors? Well, let's just say this isn't the kind of risk they signed up for. Flippers could get stuck with properties they can't sell, and landlords might see rents drop as demand softens. It's a tough pill to swallow, but ignoring it won't make it go away. The question is, what's the next move? You know, it's one thing to hear about the market cooling off, but when you see the numbers, it really hits home. Take West Palm Beach, for example. Just a year ago, the median home price was sitting pretty at $480,000. That's a big number, right? But fast forward to today, and that same median price has dropped all the way down to $420,000. That's a $60,000 drop in less than 12 months. $60,000. That's not just a dip, that's a steep slide. And it's not just a few homes here and there. This is the median, meaning half the market is feeling this shift. It's a clear sign that things are changing fast, and if you're thinking about buying or selling, you've got to pay attention. Because in a market like this, timing isn't just important, it's everything. For families in West Palm Beach, the past year has brought a tough reality check. Single-family homes, once a steady source of financial security, have seen nearly 5% of their value slip away. That might not sound like much at first, but when you're talking about a home worth $300,000, 5% is $15,000. Gone. For a lot of folks, that's a chunk of their savings, their retirement, or maybe even the college fund they've been counting on. Homeowners who were planning to sell are now facing a hard choice. Take a loss or wait it out and hope the market turns around. But waiting isn't always an option. Maybe there's a job relocation, a growing family needing more space, or just the need to downsize. Whatever the reason, that 5% drop can mean the difference between breaking even and walking away with less than expected. And it's not just about the money. A home is more than an investment. It's where you raise your kids, where you build memories. When the value drops, it's not just the numbers on paper that sting. It's the feeling that something you've worked so hard for isn't as solid as you thought. For some, it might mean putting off renovations or tightening the budget in other areas just to keep up with the mortgage. Then there are the ripple effects. Lower home values can mean less property tax revenue for the city, which might lead to cuts in services everyone relies on. It can also make it harder for neighbors to refinance or take out home equity loans if they need cash for emergencies. In a place like West Palm Beach, where so many families have put down roots, this kind of shift doesn't just hit the wallet, it shakes the sense of stability that comes with owning a home. So let's talk about what's happening in West Palm Beach right now. Condos there have taken a bit of a dip. Median prices are down 6.1%. That's not a small number, and it's definitely something to keep an eye on if you're in the market. But here's the thing. While condos are seeing that drop, single-family homes are telling a different story. They've been holding steady, even climbing in some areas. It's like two sides of the same coin. Condos are feeling the pressure, maybe because there's just more of them sitting on the market, or buyers are being pickier. But single-family homes? They're still the golden ticket for a lot of folks, especially families looking for space and stability. So if you're weighing your options, it's worth thinking about what you really need and what kind of investment makes sense for you long-term. Pending home sales in West Palm Beach have taken a bit of a hit, dropping by 14% compared
നമസ്കാരം
to last year.
സ്വർണത്തിന്റെ
Now, what does that actually mean for the market? Well, when fewer homes are going under contract, it usually signals that buyers are pulling back a bit. Maybe they're waiting to see if prices dip further, or perhaps higher interest rates are making them think twice. This kind of slowdown can have a ripple effect. Sellers might start to feel the pressure, especially if their homes are sitting on the market longer than they'd like. Some could lower their prices to attract buyers, which might ease things up a bit. But it's not all doom and gloom. If inventory starts to build up, buyers could find themselves with more options and a little more leverage. For the market's future, it's a bit of a mixed bag. If this trend keeps up, we might see prices stabilizing or even softening in some areas. But it's also possible that once rates ease up or buyer confidence returns, things could pick back up again. Right now, it's a waiting game, and everyone's watching to see which way the wind blows. You know, when you're looking to buy or sell a house, time is everything. And right now, in West Palm Beach, time is dragging its feet. The average home there sits on the market for 83 days. That's more than double the national average. Think about that. While homes in other parts of the country are flying off the shelves, sellers in West Palm Beach are left waiting and waiting and waiting some more. It's not just a little slower either. We're talking about a market that's moving at half the speed of everywhere else. That kind of sluggishness tells you
cashing
something.
in on the gold
Maybe
rush.
buyers
The
are being
price
extra
has soared
picky,
to
or
record
prices aren't
highs.
quite where they need to be. Either way, if you're trying to sell, you've got to be patient. And if you're trying to buy, well, you might have a little more time to weigh your options. But don't get too comfortable. 83 days is still 83 days too long for anyone eager to move. You know, the market's shifting in some pretty interesting ways right now. Take West Palm Beach, for example. Nearly 5% of homes there are selling below their asking price. That's not something we've seen much of lately, but it's a clear sign that things are changing. Buyers are starting to hold more of the cards, and that means they've got a little more room to negotiate. Sellers who might have had multiple offers just a few months ago are now finding they've got to be a bit more flexible. It's a subtle shift, but it's one worth paying attention to if you're in the market. The balance of power is tilting, and buyers are stepping into a stronger position. You know, it's getting tougher and tougher to hold onto a slice of paradise in West Palm Beach these days. Take waterfront homes, for example. Those dreamy spots with the ocean breeze and the sunset views. They used to be the ultimate Florida fantasy, but now they're turning into a financial nightmare. Insurance premiums have shot through the roof, with some homeowners shelling out as much as $11,500 a year just to keep their coverage. That's not pocket change. That's a second mortgage for a lot of folks. And it's not just the big-ticket properties feeling the pinch. Even folks in more modest homes are seeing their premiums climb higher and higher, year after year. It's like trying to fill a bucket with a hole in the bottom. No matter how hard you work, you're always scrambling to keep up. For families already stretching their budgets thin, this is one more weight dragging them down. You start to wonder, how much longer can people afford to live where they've always called home? It's not just about the money. It's about the peace of mind slipping away, one premium hike at a time. You know, putting all your eggs in one basket is never a good idea, especially when it comes to investing. That's why experts always talk about diversifying. And it's not just about mixing things up randomly. You've got to think long-term, too. Markets go up and down, but over time, they tend to grow. So, by focusing on steady, reliable investments and not panicking over short-term dips, you're setting yourself up for better stability.
दोस्तों आप लोग दिवाली की छुट्टी पर क्या गए पूरा गेम ही बदल चुका है पहली बात तो यहाँ
Economic uncertainty reigns supreme,
you're
and that's
giving
fueled the
yourself a
rush
better
to
shot
buy
at
gold.
riding out the rough
The price
patches
of the
and
precious
coming out
metal
ahead
top.
in the end. Staying ahead in today's fast-moving markets isn't just about luck. It's about being informed and ready to act. The key points to remember? First, knowledge is power. The more you understand the trends, the better you can anticipate shifts before they happen. Second, flexibility matters. Markets change in the blink of an eye, and those who adapt quickly are the ones who come out on top. And third, don't wait for opportunities to come to you. Go out and find them. Stay curious, and most importantly, stay ready.